Hi, good morning. You're watching the market right here on ET Now. The big trigger this morning, maybe not for our markets, but at least for the global markets, has been the commentary coming in from US President Joe Biden overnight, stating that he's confident that they will get the agreement on the budget, that America will not default. And that's the big trigger point, which is acting upon all global markets. It was a big move on US equity markets overnight on Wall Street, and that really is eluding some kind of confidence. Biden also said that they're going to be meeting with the congressional leaders, civil and respectful. All parties understand the consequences of the failure. Also, a word coming in from McCarthy saying that possible to get a deal by the end of this week itself. So, will not America fail? I think that's the messaging.
We will not let America fail, and everybody knew that this in a sense was always this Republican versus Democrat ego war, more like a political statement. The Republicans are blaming the Democrats are blaming the Republican, everybody is blaming the White House is blaming the Congress is blaming the Senate.
It happens everywhere.
It happens everywhere, so it's no different. So it was always, it was always this, 11th hour, 59-minute kind of a negotiation, which I think markets were prepared for. But then why is there a relief rally? The relief rally is that, somewhere the US markets and the dollar index in last couple of days, because of the debt ceiling issue, has been jammed irrespective of what has happened to other emerging markets and what has happened to risk-on assets. The interesting bit now is that if global markets, they make a comeback, could that lead to minor underperformance in India? And will money start again migrating back to developed markets? I think it's too early to discuss that. But for the moment, it appears that this political stalemate between the Republicans and the Democrat is reaching what could be called as a logical conclusion, which is that nobody wants America to fail.
Oh, yes, indeed. And we have Adrian Moat, who is joining in, EM Equity Strategist, to discuss this and a lot more. Thank you so much, Adrian, for taking time out. As we alluded to at the get-go, this is, of course, the big headline. The fact that America will not default being categorically said by Joe Biden, perhaps in the 11th hour, but nonetheless, it is going to come in as a relief.
Yes, it does. I would slightly caution you on saying that this is all about the debt ceiling negotiation. There was an announcement by Western Alliance Bank that their deposits had grown, and we saw a significant rally in financials in the US overnight. So if you look at the main financial ETFs, they were up between 2 and 3%. So I think that was probably the bigger contributor to market performance than the president saying that they'll come to a deal. Because remember, we're talking about coming to a deal. We don't have a deal yet. So I would suggest that the risk-on rally had more to do with financials than the debt deal.
So Adrian, now that things are falling, or things are aligning beautifully, US debt ceiling, perhaps the political stalemate will be over. US regional banks, they've been rescued and they've started rallying back. Crude and commodity prices are lower and inflation is down. So are we in for a charged up risk-on environment for global equity investors?
So I think that, you highlight that there are some good fundamentals out there. So if we can reduce the stress within financials, both in Europe and in the United States, then I think you could get a broadening of the move that we've seen in the US market and the European market. So it's been European cyclicals that have moved, and in US you've had some of the major stocks such as Meta, Google, Amazon, Nvidia, etc., that have been driving the market. I think if we can see the market in the US broadening so that the financials are starting to add positive attribution as opposed to being significant declines year to date, then that would be good for maintaining the broad rally that we're seeing in developed markets year to date.
Amidst all of this, Adrian, just wanted to understand what's in it for India, because, India, in that sense, the central bank has been ahead of the curve. It was a pause this time around. Inflation seems under control. And FII participation as well has come back to India equities. More so that entire case of money now moving into China and flowing out of India, that doesn't seem to be holding true.
Well, I think that the delta that's occurred within the major emerging markets is confidence on China has diminished since the market peaked late January, early February. We've actually had a very good economic data. I look at the Citibank Economic Surprise Index for China. That is very high, but it's interesting that the qualitative narrative rather than the quantitative data has been much more circumspect about China. We just had results out for a big Chinese IT company, Tencent. The numbers at an operating level were strong, but they did have a bigger tax bill, and the stock has fallen on the back of that. So I think the confidence around China is more fragile, and at the margin, India is benefiting from that. Now, the Indian macroeconomic data has continued to be robust. And if you look at sector performance year to date, you've had good performance out of selected financials and very good performance out of the auto and the two-wheeler sector, which are classic proxies for a strong consumer in India. And the market is only up 1% year to date because you've had weakness in Infosys, which partly reflects a corporate in the United States cutting back on costs. And plus, you've had weakness in the Adani group for well-documented reasons. And finally, we've had weakness in stock like Hindalco, and we've broadly seen weakness in commodity companies across the globe, not just in emerging markets. So, if you've been in the right sectors in India, a bit like being in the right sectors in the United States, so far it's been a pretty decent year.
Mawad, always a pleasure, and thank you for joining us. So let's connect the dots here. The global handover is strong. SGS is indicating that we could be in for a decent start. So what is the mood point like? If you have to analyze the trader screen, in my book, nothing has changed. Trust me, nothing has changed. Yes, 2 or 3 days you've consolidated here and there. You had a bad Tuesday. You had one bad Wednesday last week, but that does not change the overall trend. The trend is that markets are still poised to go higher. The trend is that the summer rally of 2023 is still intact. I don't think the last hurrah in the market is left. You are seeing evidence of money now or action now picking up in two-digit stocks and single-digit stocks. Well, I would be a bit watchful there and careful there, but there is no evidence in my book based on open interest, participation by retail investor, the outstanding positions in the FNO, which are indicating that markets are nearing any kind of a climax. Global cues, which were slightly bumpy, they've also become strong and supportive. So I will not be surprised that if we today get a decent number from ITC and State Bank of India, this market actually could be in for more gains. The summer rally of 2023 is not over. The markets are not overbought. Participation is low. Everybody is waiting for a correction, and the correction is not coming. What happens after that? 10 years ago, I would have said frustration. Now I'm using the word FOMO.
Yeah, okay, just let's...
Such millennial terms, no? We have to use those terms.
Such millennial terms, at least.
We learn from Awan.
FOMO, JOMO.
Yeah, I'm clueless with a lot of them, I'll be honest. But
you only live once. That's the other one, right?
Yeah, YOLO.
Yeah, that came out during COVID.
And there is one joy of missing out, JOMO.
JOMO.
So FOMO, JOLO.
JOMO, YOLO.
Wow.
Okay, no cool millennial terms when it comes to the earnings. As Nikunj was talking about, yes, there's ITC, there's SBI. Those are the heavyweights that are going to come out with their numbers today. Between today and tomorrow, it's fairly critical as well. The fag end of the earnings season, NTPC, Power Grid, JSW Steel as well. And Nikunj, clearly it's going to be SBI as well as ITC that we'll be watching out for. It's expected to be fairly healthy for SBI and ITC, the cigarette, FMCG business, all of that will be closely eyed.
See, they both are on the different ends of the spectrum. Let's look at ITC's performance last quarter. It's been an outperforming stock for 2022 and it's been outperforming for 2023. State Bank of India, even though the bank nifty is at an all-time high, State Bank of India, last I checked 2 days ago, is actually flat for the year. Let's look at it. ITC YTD and State Bank of India YTD. And take the numbers out. It's the stock what you need to understand first. Why the stock is important. ITC, no, that's yesterday's gain. Yes, yesterday's graph. If you look at ITC in this year, ITC in last 1 year has outperformed. ITC, State Bank of India in this year has been flat. So my point is very simple, which is that State Bank of India, even if numbers are strong...
ITC this year, 29% and SBI this year is down 4.5%.
Exactly.
Yeah.
Even though Bank Nifty is at an all-time high. So, State Bank of India numbers, if they are also in line with estimates and they talk about two things, that ROA, which is return on assets, would be maintained above 1%. And if the base number is anywhere between 16 to 16,500, I will not be surprised that State Bank of India actually could rally. ITC, I think if the volume growth and the number our viewers need to memorize is that it's in performing stock, so expectations are high. 14% cigarette volume growth and a positive commentary on the FMCG business, I think, is in the price. So ITC actually may not see a big result reaction. If today the management comes out and says, yes, FY24, we could be looking at demerging a hotel business, that is going to be, then the bulls would have a feeling of a carnival. But otherwise, I think ITC actually could be a case of buy the rumor and sell the news. State Bank of India, because it has underperformed and the bank nifty is at an all-time high and it's become attractive after 6-7 months of consolidation. If numbers are half decent also, we could be in for a surprise for SBI.
Yeah, that clearly seems to be the case. Okay. We're just looking at an exclusive chat which is going to come up later in the show today. And Warri Energies could one day become $1 billion company. That is the word coming in from ValueQuest's Ravi Dharamshi in an exclusive chat. He was at the Warri plant in Gujarat. Find out what makes him so bullish on this company.
So I think last 10 years was a time period in India when you should have avoided businesses that need too much of capital or too much of debt. Now the next 10 years, you are going to make a lot of money investing your capital in businesses that need capital. The metric to focus on is the incremental ROCE from that business. Is it attractive enough or no? And even if it requires capital, the reinvestment rate and the returns earned on that is making the company even more attractive, in my opinion. Which company in manufacturing sector do you know that can go from being a 70-80 crore profit company to a 2,000-3,000 crore profit company in a span of 5 years? That is the kind of scale up that we are witnessing. That is possible only with capital, right?
It is why the other point is that once a company reaches a curve, there is a different talent requirement, there is a different HR requirement, there is a different type of challenge to manage scale. Right. The only sector which I think has done very well in India, I think, is IT. They started small and they built up scale. Right. How will you manage scale? Because the numbers what Ravi is talking about, the numbers what he demonstrated, it is humongous. Whether it is blue sky or deep ocean, whatever may be the terminology, the size is huge.
Definitely we need to change the way we are doing the business. We need a lot of intervention of the various consultants. We need that kind of the talent. So execution is the key now. An entire organization working in that direction to get the talent, to change the processes, system, corporate governance. And for that, very reputed consultants from India, Germany and China are already on the board and they are helping us to scale up this and change the way we are doing the business.
So, Nikunj, I'll add to that. Hitesh Bhai is being a little modest, but and scaling up is not only about the numbers growing. It is also about going from being a family organization to a professional organization. So they would have recruited more than 40 people in the senior management role. They have gotten E&Y as an auditor. They have KPMG as an internal auditor. They're independent. The board size is growing. The reputation of the board is good, and the kind of systems and processes that they are putting in place, it tells you that this is not a small company anymore. It is a company that is probably do $1 billion profit one day.
Do you see $1 billion?
One day.
Okay, we've got that special chat lined up for you later in the day. But for now, let's focus markets and top recommendations. And for that, we've got our chartists with us. Nooresh, Merani and Kunal Bothra joining in as always. And Kunal, let's start off with you. Given what we've seen as a pretty healthy handover from the global markets and the fact that yesterday we were down about 0.5% or so, what is it that you're working with? Do you think that we'll scale up from the 18,180 mark?
Good morning, Avan. So I think it's going to be a tough path for the indices going ahead, because the data yesterday showed for the first time that there is some sort of pressure which has come back, or nervousness which has come back into the indices. Now, yesterday saw the Nifty and Bank Nifty both unwinding by almost 7.5% in terms of open interest. This is the first time where we've seen such kind of it's not a huge quantum, but then still there's a sizable unwinding which has happened for both the Nifty as well as the Bank Nifty futures, and that could probably play effect into the rollovers for the next week, which is for the next series, which starts off with the next week expiry. Today being the weekly expiry as well, also is another crucial factor, because here we tend to look out for which are the ranges where the markets or the traders have established the resistance and support. And the first important support actually comes at 18,000 mark in terms of the put open interest on the put on the Nifty, and on the upside I think it's 18,300 to 400 on the Nifty. So market participants are actually expecting that the markets may not have too much of a headroom on the upside, and 18,300 to 400 could be a huge resistance for the index to at least scale past for today's weekly expiry. And on the downside, 18,000 could be a critical support to watch out for.
Right, let's take it across to Nooresh as well, find out what he's making of the market. Nooresh, some consolidation, or do you think we'll catch up with the Wall Street handover overnight?
So I think we are getting into a new range, which is where we should be closer to 18,000 being a shorter term support and 18,400 being the resistance. So expecting a bounce from the zone, and anytime we keep coming to this levels, we should be expecting a bounce. So for now, today I would expect some bit of a positive reaction across the board. What we've seen is in the last two sessions, it has only been the heavyweights which have taken a knock. So we've seen that resistance for HDFC Bank play out from 1730 odd levels. We are back to 1630 almost. Kotak Mahindra Bank from 2000 to 1900. So a lot of these heavyweights have taken a knock, whether it is Reliance, HDFC, Kotak. But the broader market has been doing well. So today we would expect some bit of recovery going forward. So would expect a 100+ point move possibly today.
Okay, let's find out then in that 100-point move what exactly it is that our chartists are looking at by way of individual stock calls. Kunal?
So I'll go with a couple of buy calls, and the focus is on mid-cap names. So two buy calls. The first one is on Poonawalla FinCorp. The stock looking quite charged up yesterday, closing at 325 plus levels on the spot basis. So that's a buy, targets of 350 on Poonawalla, stop loss to be kept at 320. And the second would be upon Grasim. Now, interesting because I think after 4 or 5 consecutive days of selling, the stock for the first time has formed a bullish hammer kind of a candlestick pattern, which indicates that maybe the near-term bottom could be at place and the worst could be behind, at least from a short-term play. So, would suggest a contra buy on Grasim, targets of 1800, stop loss at 1690.
All right, let's find out what exactly it is that Nooresh is betting on. Nooresh, Kunal is going with a mid-cap tilt. What about you?
So looking at a mix of large cap and mid cap. So first is a buy on IndusInd Bank. The stock has consistently shown momentum. Once crossing above that 1170, the stock has moved up to 1230, 1240 levels, even when the markets have corrected. Indication of real relative strength. Now on the longer term picture, 1250 is a major resistance. Now this is a price where it was before COVID. Plus over the last couple of years, this has been a resistance. Expecting that to break out, and once that breaks out, it opens up a move to 1400 to 1600 levels also. Given that there is a relative strength, it increases the chances that the breakout is in the near term itself. So a stop loss at 1190 and a target price of 1400 to start with. Second is a buy on Gujarat Gas, which has gone through a sideways triangle consolidation. The base has shifted higher to 460 levels. The breakout is above 500, 510. Preempting that move, seeing that what has happened to the rest of the gas stocks, this could also take a catch up. Out here, a stop loss at 478 and a target price of 550.
Right, okay, we'll take a very quick break on that note. The SGX Nifty, by the way, is not really seeing any rub-off from the Wall Street handover, indicating just a very mildly positive start. In fact, flat, it was mildly positive earlier in the day, but now it's fizzled out, barely holding out in the green, 18,289 on that index. Let's see which way the day actually pans out amidst a slew of important earnings as well today. We'll take a very quick break, come right back. We'll tell you all about the stocks and news this morning. Back with the market right here on ET now. The SGX Nifty indicating a mildly positive start, although the handover from the rest of the globe, at least from Wall Street, is after Biden categorically saying that he will not let America default. That really cheered up Wall Street. Having said that, Asia as well is holding out quite okay. I was just looking at the rates in Japan, for instance. It's a solid 400-point move that you're seeing on that market. Korea holding up 0.5%, Hong Kong up 1.25%, and Shanghai as well higher by about 0.5%. For our markets, it's much more tempered, at least for the SGX. But a lot of stocks and sectors in focus. You've got two big boys, SBI and ITC, both reporting their numbers today. There's also HAL, which is going to be in focus. Let's take a look at the key takeaways from the conference call that they held yesterday. They've guided for a double-digit revenue growth by FY 24-25. Let me take it across to Vamakshi and get in more details from the conference call. Vamakshi?
Well, yes, the management has highlighted that it was definitely a challenging year for them given the business environment, but they believe that they did show resilience during the year. Now, as far as FY24 is concerned, they are expecting it to be a good year. They are expecting to post double-digit revenue growth in FY24 or 25, and in fact, this is going to come in with an EBITDA margin guidance of almost 26 to 27%. They're also looking to manufacture as well as commission LCA Mark 1, HTT40, 25 additional ALH as well as SU30 during FY24 itself. And not just that, their order book also looks quite robust, standing at almost 82,000 crores. Now, significant efforts are also being made in order to promote exports. They're seeing leads trickle in from Algeria, Indonesia, Middle East, Thailand as well as Malaysia. Now, there were some supply chain concerns due to the geopolitical conflicts, but they're all getting normalized now. Now, the management also spoke about the ALH Dhruv crash issue. Now, Dhruv has had 3 incidents over the last 2 to 3 odd months, and all these accidents they highlighted aren't due to a similar issue. The Air Force is still, however, flying through. It is only the Army that has grounded it. So those were all the important takeaways that did come in from HEL, and on the back of these comments, watch out for HEL.
Thanks very much, Vamakshi, for highlighting all of those con call details. Moving on then, and let's focus in on earnings. JSW Jindal saw a bumper set. You have the Q4 EBITDA coming in at an all-time high. Let's take it across to Sharad, who joins in with the earnings fine print. Sharad?
Well, yes, in focus we are having Jindal Saw, and the fourth quarter numbers have been very strong set of numbers coming in, with the EBITDA jumping almost 50%. And if you look at PAT as well as EPS, both of them jumped 2.5 times on a year-on-year basis. Now, the company itself delivered its best quarterly EBITDA numbers, and looking at the performances of the foreign segment as well as the Indian segment, which actually stood out and was above analyst estimates. Now, looking at the order book itself, it came in at almost $1.5 billion on a combined basis. That itself rose 150% on a year-on-year basis. Apart from this, looking at the internals, we saw that this was a benefit coming in from the good order mix, and also the gains coming in the DI pipes, especially for the older orders, which actually increased spreads for the company. Now, when a spread increases, the margins also increases, and that's what we saw with a 150 basis points increase in the margins as well. Apart from this, looking at the segmental performances, DI and saw pipes stood out overall in the earnings season, with almost a 27 to 37% volume growth seen on a year-on-year basis. Now, pellets did see a degrowth of 4%, while seamless pipes also came in with a 14% strength on a year-on-year basis. Apart from this, the consolidated net debt also reduced by 700 crore sequentially, coming in at almost 3,800 crore rupees, and two reasons attributed for it. First one is it's aided by the working capital release and also advance coming in from the customers. Now the guidance going ahead for the company includes that they'll be bidding more domestic and export orders, especially from the oil, gas and water segments. That's where the commentary is strong, and also the merger of subsidies and affiliates in order to simplify the company's restructuring process will also aid to the margins and operating leverages going ahead.
Okay, let me now take it across to Harsh. SBI, the big boy, is all set to report its Q4 numbers. Harsh, what can we expect?
Well, yes, we're expecting a solid expansion with regard to net interest income, 40,000 crore. That's a significant 28% expansion on a year-on-year basis. We're also expecting operating profit to go up along the lines of that. So 27% increase in operating profit coming in at roughly 25,000 crore odd. So we're seeing those two numbers showing a healthy uptick. Provisions, on the other hand, is going to show a downtick, which is a positive. So all of that aiding profitability. But let me first take it to provisions. Provisions were at 5761 crore in Q3 of FY23. In Q4, we're expecting that number around 5,500 crore. So we're seeing a sequential downtick there, which will aid profitability. Profits will go up 65% is largely the consensus. 65% higher on a year-on-year basis. 15,000 crore is where that number is expected to be at. In terms of the balance sheet itself, advance is expected to grow a solid 16% year-on-year, but deposits are expected to show very, very tepid growth, 2% sequentially, 6% year-on-year. But keep an eye out on that deposit number, because going forward, what's the commentary which SBI gives out in terms of that deposit growth number is going to be key. The other piece that's going to hold the key is, of course, NIMs and credit costs. Credit costs are expected to trend lower, but at the moment, it's a benign credit cost environment. Going forward, what is the guidance is going to be the key as well as on the MSME front, how is asset quality is going to be looked at. So largely a solid set expected from SBI, at least this time around. Commentary forward is awaited.
All right, certainly all of that will be closely eyed when it comes to SBI. And the other big heavyweight, ITC, will be coming out with their numbers. What exactly is the company expecting? What is the street expecting, rather, in terms of the cigarette business, the hotels business, any sort of announcements on the anvil? Let's take it across then to Vinny, who joins in with that perspective. Vinny?
In terms of numbers for ITC, we're expecting a revenue growth of around 7% coming in from the company. Profits expected to see a 15% growth, while in the operating performance also we are expecting an improvement there as well. EBITDA margins expected to see an improvement and expansion of around 340 basis points. EBITDA margins expected at around 37% versus 33.6% last year. What is supporting this, EBITDA margin, gross margin expansion is that, mainly a softening in terms of the raw material prices that has happened, which is aiding the margins of the company. And other than that, obviously there's a better operating efficiency as well, which is supporting the margins of the company. Cigarette volume, an important number we keep an eye out on, that's expected at 13 to 14% this time around. Non-cigarette business also is expected to do well, so that's the hotels, papers, FMCG business. That's also expected to see a good growth coming in there. Hotel business specifically, we're expecting a robust growth, mainly because bookings have witnessed a strong traction coming in there as well. So keep an eye out on the hotels business. Agri business, on the other hand, that's one thing that we could be seeing a decline in terms of the revenue coming in for the company. So keep an eye out on that one. Factors to watch out for in terms of commentary coming in on the price hikes. Are they taking any further price hikes in the cigarette business? FMCG, overall the growth as well as the EBIT margins, that's an important number you keep an eye out on as well. Corporate actions, anything that will turn out, any commentary on the demerger of the businesses is something that you should keep an eye out on.
Okay, and keeping with management meets, Nuvama has listed the key takeaways from Coal India's management meet, which was held yesterday. So let me take it across to Harsh and get in more details on the same. Harsh?
Well, yes, Coal India in focus, and Nuvama has met up with Coal India boss Pramod Agarwal, who's the chairman there, and what he's suggested is that costs are going to come off. Couple of reasons why. One is that costs have peaked out with regard to the full provisioning that they've done with regard to wage hikes. So that's factored into FY23. Going into FY24, there's going to be an absence of arrears, and that'll lead to a reduction in employee costs in FY24. So that's one piece of the pie which is positive. The other piece is that beside the lower employee costs, you're also expecting prices of explosives and diesel, which has declined, to also come lower in FY24. So both of those will aid on the cost side. With regard to growth and expansion, they're expecting an 8 to 9% year-on-year FY24 volume growth, as well as on the price hike side, they're optimistic that price hikes will be passed on in largely under the FSA in FY24. So both of those will aid the top line as well. So that's the other key positive. The high dividend yield with regard to the valuation provides some amount of cushion to Coal India already. So Nuvama largely positive on that particular count.
All right, Harsh, thanks a lot for that. Chakri Lokpriya joins us now. Let's take our conversation forward and understand that what he makes of the current market construct. Chakri, good morning. What do you want to start with? There are two big numbers today, SBI and ITC.
Good morning. I think, SBI clearly, the numbers are expected to be good, simply because, the loan growth is picked up quite well. While, yes, there is going to be a kind of a peaking out of terms of net interest margins, but the whole loan environment is very strong, as well as the asset quality for the bank and for the industry still remains robust. You can see some improvement in provisions. And importantly, the valuation is still very much on SBI side. So I think there's significant upside from the current levels for SBI.
If the call to buy SBI is so clear, why is SBI underperforming so massively this year?
Yeah, SBI one as the usual banking concerns that crop up every once in a while. That has kind of hit the stock, but fundamentally there has one the Adani issue after that you had one issue after the other. But fundamentally there is nothing. Everything is actually pointing to a very robust in all its lines of businesses, whether it's the corporate book or whether it's the retail book, and therefore I think those. Today's numbers will kind of be an indication that all is well with SBI.
Okay, fair enough. That's the view coming in from the two major earnings candidates. But what about your outlook then when it comes to the defense space? We just, Chakri, heard out HAL in their conference call, very confident and sharing very optimistic outlook, double-digit revenue growth, EBITDA margin guidance healthy, order book looking very strong. Would one tend to be very selective within this space? And if so, what is it that you like?
HAL, Bharat Electronics, they all still look extremely strong. The beauty of all these companies is, while for a long time they did nothing, and now the order books are looking so very strong, so it gives you revenue visibility for the next 4 or 5 years. And so there can be, quarterly mismatches depending on when the order book closes. But the underlyings are so strong, and, because of all those price margins, price margin restrictions which the government usually places, luckily haven't really impacted HAL, or Bharat Electronics is kind of well settled down. So I think the outlook still remains very strong for these companies.
Chakri, just wanted to ask you what you're making of the entire QSR space, especially in the light of Jubilant's numbers, which seem to be the best amidst the peers.
Indeed, I think in the case of QSR, they have underperformed last year for the reasons such as, high commodity prices, consumer demand was quite tepid. And now the opposite is happening. Input prices are coming down. Companies are not passing on so much of, are not increasing prices. And just the cost decline itself will help them protect margins. And volumes are coming back. And, if you look at all these companies, they're kind of expecting that inflation overall is going to come down if you fast forward another 12 months out. So, and going into summer holidays and all those good things, I think valuations are on their side. The whole QSR pack looks good.
I'm going to shift gears and go back once again to private banks, Kotak and HDFC Bank. Kunal, Nooresh, HDFC Bank. Just when it appeared that it was get, set and go. On your marks, get, set and go. Stops. गोली नहीं चलाता कोई.
I think that news of MSCI, I think, has damaged the trend for HDFC Bank on an immediate basis. But then, my belief is, Nikunj, that if a large cap stock makes a comeback, even if it's dented by such kind of news flow, it can be put off by, say, another couple of weeks. But then eventually these stocks, they have a tendency of coming back very strong. And that next leg of breakout could be far more stronger than what we've seen for HDFC Bank as a recovery in the last 1.5 odd month. So I'm not too much perturbed with the near-term trends for HDFC and HDFC Bank, that these stocks are struggling to get into a breakout mode. There was a single-day breakout for these stocks, but then post that there was a negative amount of news flow. Eventually, these stocks would definitely make a strong comeback. They've already done the hard work in the last 1.5 odd months, trying to recuperate and recover the entire 1.5 years of underperformance with respect to other private sector banks as well as the large cap PSU banking names.
While we are market reacted to MSCI news, I would like to bring everyone's attention to what SBI Mutual Fund has yesterday, in a sense informed. SBI Mutual Fund in principle has taken a permission from the regulator that they want to increase their stake in HDFC and HDFC Bank above 10% on a combined entity. We'll just put that news up. That means that the largest mutual fund in India has got in principle approval from the regulator that they want to increase their stake. So while we may talk about MSCI rejig here and there having an impact on HDFC Bank, but the fact that India's biggest mutual fund is looking at increasing their stake in the stock, I think that for me is a very encouraging news. Chakri, you want to react to that news?
Indeed. I think there are a couple of points. One is an enabling resolution is a requirement for them to make it easier for them to buy as and when, to acquire stakes as and when they want to do so. And from a regulatory perspective, is the procedural thing. Second, I think the SBI Mutual Fund already holds, please don't hold me to this number, but I think they already hold about 4 to 5%. Which means it's an incremental about 5-6% that they want to acquire. This kind of, we need to cross-check the second bit. Now, third, clearly, yes, you're absolutely right. It is very positive news that one of the largest mutual funds wants to take, has an enabling resolution to acquire into HDFC Bank.
Right. Okay. Stay with us, Chakri. Lots more to talk about. And of course, we'll get you the stocks in news segment as well. But here's Hemang Jani telling us what he's making of real estate stocks.
When you look at the quarterly numbers, the outlook, it continues to be very strong. And our take is that this cycle could turn out to be very strong for next at least 2 to 3 years. And, this being a high beta space, sometimes the stocks go through big corrections, 30-40%. So I think even when they've gone up, let's say about 10-15%, we do see scope for a significant, rally in these names. Godrej Property is something that we like. I think we can also look at Lodha, which kind of has relatively not done as much compared to some of the other real estate names. Even the new government in Karnataka, we think that, some of the names like Shobha, Brigade, they could do extremely well. So I think this sector is showing a lot of momentum and one should participate with a positive bias.
Okay, real estate, that really has been the buzzing one off late. But Kunal, just wanted to get your sense in on the banks and especially in the light of SBI's numbers today. Nikunj was talking about the data as to how year-to-date SBI has actually dipped 3.5%. What within banks is looking strongest to you and what's looking weaker? Because not all banks are doing well.
Well, so a relative comparison from the December highs when the Bank Nifty was at 44,000 indicates that the only change which has happened is that AU Bank and these new names have actually emerged as strong breakout candidates. HDFC Bank has recovered from the previous December highs for the Bank Nifty. ICICI Bank has been an outperformer, but most of the PSU banking stocks have actually underperformed. And I'm specifically focusing on the mid-cap end of the PSU banking names. So I think the tilt of the market is more towards the large cap names in this leg of price uptrend. That could probably indicate that maybe the likes of SBI, HDFC Bank we discussed earlier, these stocks can make a dramatic comeback going forward as well. So the move seems to be sustainable for these large cap private sectors as well as the PSU banking names. My sense is post SBI results, if there is no major negative news flow, the stock could come back towards that 600, 620 mark.
That's the view on the banks, but let's move right on then. Stocks on the editor's radar, and those graphics are getting my stomach rumbling, Nikunj, because we're talking about all the QSR plays, Devyani, Sapphire, Jubilant, Westlife, and we've done an interesting comparison as well, discussing what the outlook has been in terms of their performance of the individual companies, as well as what the commentary has been down the line. What's really stood out? Because I think Westlife was the only one that came in with healthy numbers.
The most important number which markets looks at in order to understand the growth of the business is SSS.
Yeah.
The same store sales. In that, there is a lot of variable factors which really are at play. Frankly, if you ask me, Jubilant is growing. KFC, which owns, KFC, we don't need to introduce the product here. That business is growing. But in case you're wondering that why, if Indians are eating out so much, why you don't have a really strong trend in the entire QSR space, at least the listed ones. Do you want to guess that?
Why is that?
Indians are eating biryani.
None of the companies,
none of the companies here actually are in the biryani business. They're still in the startup space. So the point I'm trying to make here is that these businesses, the QSR space, now it's almost like a basket of 4-5 names. They've gone through a patch of high inflation, solid expansion, and huge uptick which came immediately after the COVID as you were staying indoor and you were ordering more food. And inflation also has really managed to take a piece out of that pie. But worst for the sector is behind us. That is the sense which you're getting in terms of the demand, and that is the sense which you're getting in terms of commentary. The problem is that this entire basket is very richly priced in terms of valuations. 54 times for Westlife, Sapphire Foods, 48 times, all of them. Now, this is pretty much like valuations what some of the FMCG brands they are commanding. And for me, anything which is commanding valuation of FMCG stocks, if it's growing at 15-20%, it means that markets are already pricing that in. I've got a report from CLSA on Jubilant FoodWorks, sell. I've got a report from Jefferies on Jubilant FoodWorks, external environment challenging. I'm not done. JP Morgan, Jubilant FoodWorks, neutral. And then you've got Macquarie, capex hike and muted near-term outlook. My limited point here is that while it's great and fashionable to talk about the QSR space, because that's the new India, that is the India which is going to be experimenting more with food. We are getting right now, I think we are at the transition phase right now where you want to eat more calories rather than focusing on the health part. That is how the migration is moving in small towns as well. So I think some of these stocks, at least the QSR stocks, are looking expensive. You want to buy them, but you don't want to buy them right now. And considering where the valuations are, I guess in the near term, these stocks can go through time-wise correction as well as price-wise correction. It's a great space to be in if you've got 3, 4, 5 year view. But these are not the great stocks to buy at the current valuation.
Great space to be, but time-wise correction is on the cards. That's the view, Aisha, coming in on the entire QSR space.
Oh yeah, absolutely. A buzzer there. At least Sapphire and Jubilant in trade yesterday. In fact, Macquarie as well has come out with a recent note where they're actually maintaining their underperform on Jubilant FoodWorks, saying that the capex hiked despite muted near-term outlook. Continued milk inflation pressures is what they foresee in the first half of FY24, and that's making them conscious. Also saying that the sequential margin decline shows how cost controls were unable to fully offset pressures from input inflation as well as demand weakness. So that's the take coming in on Jubilant FoodWorks. In fact, there you can see a highlight of what other brokerages as well have said on Jubilant. The other interesting pocket has really been what's going on within the entire auto universe, because you're once again seeing a very charged up move by Hero MotoCorp, Tata Motors practically at an all-time peak in any case. And then M&M, one of the best performers of last year, is somewhat consolidating, although it has had a few sporadic up days of late as well. Chakri, where within auto do your preferences lie? Or would you say stick by with auto ancillaries?
Within the auto, I think clearly, while Hero Motor has run up a little bit, I think still valuations are in its side. They have a couple of 1 or 2 products. Of course, that's been the problem with it, which it doesn't have a product range, which is selling well. 1 or 2 products are doing well. But I think that product will pick up. So therefore, Hero Motor undemanding valuations, TVS continues to take market share and also make the correct moves in the EV space, and Tata Motors for both its international exposure through JLR. I think all these are looking good. In addition, some ancillary space ones are also looking good.
Bank guys, breakout yesterday. Yes, no, that I don't know. We want to sell, don't know when. That narrative from the government and from a market standpoint continues. Look, the government is committed to sell IDBI Bank. Now what we understand is that the multiple bidders have shown interest, and that's how a bidding process moves. For a bidding to go successfully, you have to have multiple participation. There was a buzz and perhaps almost an confirmation that Fairfax is interested in picking stake in IDBI Bank, the government stake. We also understand that Kotak Mahindra Bank could be interested in picking stake in IDBI Bank. We also understand that there are a couple of other foreign banks who are also looking at European banks who are also looking at diversifying their risk, because in Europe there is no growth and India is where growth is, and a lot of banks who have not come to India, they may really get a good entry point by buying a franchise like IDBI Bank. Bottom line, IDBI Bank yesterday up 6%, 56 rupees. In last 1 year, it has smartly outperformed. It is at 56. And some of these stocks run so fast, Kunal, that 56 could become 65 in a matter of 5 days.
Yeah, they could. And in fact, at 56, it's at a 3-year closing high. So
3-year closing high.
3-year closing high. For
3-year closing
monthly
high.
Closing high.
Okay,
yeah.
3-year closing high means 2020.
2019-20.
So it's gone back to pre-COVID levels.
Yes.
Wow.
So, and during COVID, the stock was almost at, I think, 17 rupees or 16 rupees. 16, 17 rupees. That's become 55, 56 for IDBI Bank. So, good chart, interesting breakout for the stock. And, the set of volumes for this move for IDBI Bank is also much higher than the last 2 attempts for the stock. The 2 attempts were in September 2021 and I think in August, September 2022. These were the 2 attempts where the stock scaled past about the 50 levels, charged up move on both those attempts. But the volume this time around seems to be a bit more better, at least shaping up so far on the monthly basis.
Fortis, yes, no, again because of that court case, the stock has underperformed. About a year ago, it went to 330, 340, came down to 230 after the court case. Now it's above the 200 DMA. Should a trader buy Fortis?
Well, I would wait for a breakout, Nikuj, about 300, and that would be on a closing basis because the stock in the last 1.5 years, so I think 2021, August or September is where Fortis entered into this range, 300 on closing basis as a resistance, and I think 240 or 260 approximately as a support for Fortis. So it's not that the charts have weakened out, but it's that the stock has gone through a time-wise correction, and it's very difficult to anticipate or preempt that when would the consolidation end for such kind of names. It is always better to buy this on confirmation, even if these stocks break out and say, are 4%, 5% higher from their breakout levels. But that would be a confirmation that at least we don't have to spend too much of time consolidating. So I think 300 plus levels could be a better level to buy on closing basis for Fortis.
You were very bullish on InfoEdge.
Yes.
It's gone below 200 DMA. Has the breakout failed?
It's not failed, but it's come back to the retest of the neckline. So 3840 was the neckline of the inverted head and shoulder pattern for InfoEdge. The stock went up to, I think, 4,000 levels, 4,020, 30 rupees. And then from there, it's come back towards 3840 mark. So it's retesting those, interesting necklines for itself. Hopefully, the stock doesn't see any more crack down over the next 1 or 2 days. Then I would expect a strong reversal on the upside for InfoEdge.
Aisha, the real pot of gold, what we've not discussed are some of those electronic stocks.
Yeah.
We've just not, just that slipped out. Amber, we had Keynes Technology, we had Dixon. That entire space is like riveting with a lot of energy. Yeah. Is that the new pot of gold? I mean, what happened to defense sector or what happened to railways?
That's also an extension of manufacturing, right? So, I mean, when you make in India, defense, of course, is a large ticket item, but it starts with electricals.
India is making iPhones. I understand, I remember reading a report in the Economic Times that the Tata Group has already tied up, I think, with Apple, and they would be making Apple phones here. We've become a net exporter of mobile phone. Yeah. And this is the same sector where, so India's largest export is oil, crude. Until about a couple of years ago, the second biggest import was actually electronics. And that the largest component within electronics was mobile phones. If you're just able to reduce your dependence on imports, I mean, just imagine what will that do to your forex reserve, what will that do to the dependence, and what will that do to really ensure that India becomes like a hub for manufacturing. I mean, we spoke to the management of Ari, solar panel. There are these small niche pockets which you don't realize that how large they can be scaled up, and that is what is happening. So, Chakri, what have you bought? I mean, we've discussed that manufacturing is going through this renaissance moment, and renaissance moment is like what happened to Europe when the real renaissance started. So if Indian manufacturing sector is going through a renaissance moment, how can one participate and make money? That's what our viewers want to know.
Indeed, I think the PLI has done wonders for the Indian manufacturing companies, and as you mentioned, to the electronic companies as well. Companies like Dixon, these companies operate on a very large range of products with very low margins, therefore volumes are very important. And the reason they had low margins and still have is because their import component of their own raw materials is still high but has come down. And I think that is where the biggest upside is, as because of the PLI, the import component goes down, the domestic manufacturing, therefore margins expand. And Dixon has actually corrected quite a lot, and so has Amber. And there has been, of course, now, whether it's Tata's or Dixon's, one of these companies is going to do the iPhone. And Dixon's, basically, the reasons for the margin fall over the last 1 year was obvious supply chain constraints of various electronic items. That is easing. So given that, valuations have corrected, volumes will pick up, and some of the import component substitution is happening, I think Dixon is looking okay at the current levels.
Now, let's get a move on then and get in perspective as to what the outlook is on some of the charts that are seeing interesting breakouts as well as breakdowns. And yesterday in trade, you did see something like an Amara Raja Batteries that saw a smart breakout in trade. Amber Industries as well was one of the top Nifty 500 movers, and you had an IDBI Bank as well added to that list. Nooresh, any of these names looking attractive on the charts?
Amar Raja looks interesting, but it is Exide which has shown a better chart. But both these names moving together suggests that there is some shift of momentum finally in this sector in the battery space. So Amar Raja, the last major swing high is around that 660 to 670 mark. That's a resistance. If it can cross over 660, 670, that would be a big breakout. It would be a 2-year breakout. So it looks promising, both Exide and Amar Raja. IDBI Bank is a stock yesterday saw good volume action also, not just price action. But if you look at the last almost 3-year picture, that 60 as a mark has been a tough one. So till the time we don't cross 60, it has been a major problem for almost 3 years now. So 60 would be a criteria for a breakout. So for now, I'll wait for another few days and see if it can cross 60.
Kunal, the electrical space that Nikunj was just highlighting about, I don't know how closely you're tracking that, but stocks like Dixon, Keynes, etc. Any of these on the charts?
Keynes is something which looks attractive because the history is limited because of the last, I think, 1.5 years of history for the stock. Then I think
20% now looks attractive. Yesterday it was up 20%.
No, but you have to look at the trend. So as I said, that the last 1.5 years, the history is limited. The trend is quite strong. And this generally is an indication that when you are moving into an upward trending mode, I'm not saying that you buy immediately, but then when a stock looks attractive, you wait for an opportunity for the gap to be filled. I think there were 2 or 3 stocks which actually showed a gap up move yesterday. So I think that gap creates a strong support. So when supports shift up higher by 100 to 100 points for these stocks, that creates an additional push of 10%, 15% higher for these names. So I think that's an attractive sense which I'm getting on the charts.
What has disappointed Chakri in my book is Tech Mahindra. Numbers are not there. Market got excited when Mr. Joshi from Infosys, the head of BFSI, he would be taking over as the new CEO of Tech Mahindra. Market gave it a 1-day jump, a 2-day push, a 3-day recognition, but it's back to square one. It's gone below the 200 DMA. Would you take a bet on Tech Mahindra, considering that it could be the turnaround candidate of this year?
Yes, I mean, they have a new, they have a new CEO, of course, coming in, and that is going to be, of course, a longer-term process in terms of him getting his team together, and that will take time. Meanwhile, their business has not shown any near-term improvement in any of its major segments. Telecommunications still continues to be fairly tepid. And the valuations, after all the corrections, is reflecting its pre-COVID multiple. So with no additional new revenue uptick coming in, there is no reason to give it an additional multiple. So I think in terms of this new CEO building out, is more a longer term story, which is a wait and watch. So I'd still stay away from tech.
Okay, some interesting bit of news coming in, not quite stock specific just yet, but luxury electric car maker Tesla, it seems, is gearing up for India drive once again. And, you know, this is just an extension of just Apple making its headway into India with their official stores. But officials of Tesla, owned by billionaire Elon Musk, have met senior Indian officials yesterday, apprising them of the plans to build its high-end electric cars in India for domestic sales and exports and sourcing more components. Remember, Tesla had put on hold its India drive last year as it asked the government to lower import duties. Sumit Chaturvedi, my colleague, joins in with the latest.
Premium electric car maker Tesla is readying for another India drive. It seems the top officials of Tesla met top Indian government officials today, though officials of Tesla also included those from supply chain side. What Tesla has proposed is setting up another EV plant here, but how far they're willing to go this time, it is not clear. Remember, last year, Tesla had shelved its plans because Indian government did not want it to bring cars from China, though Tesla wanted Indian government to lower the import duties. Billionaire Elon Musk had jumped in the controversy and he said that India should lower taxes. That time, Tesla had put on hold its India plans. But what we gather now is Tesla is once again looking at India plans with the plans to start manufacturing car here in CKD form and assembling cars mainly for exports to other markets and domestically selling. But how far they are willing to go, it is not clear. Tesla, clearly, we know that they make premium cars. The most valuable car maker in the whole world they are. But this time also, once again, they have come. And it comes at a time PM Modi is going to go to US on official state visit. And more developments can take place then.
All right, let's get a move on then and get a view on some other newsmakers in today's trading session. Wanted to get in your take on some of the latest brokerage notes then. And Chakri, Max Health is on Jefferies' radar. They've got a buy rating on the stock. They've hiked the target price, saying that going forward, the EBITDA growth momentum is likely to sustain. What's your outlook here?
Max Healthcare is not a company that I really cover, so I'm sorry I wouldn't be able to comment much.
Moving away from that, Coal India as well came out with their management meet updates, and they're pretty optimistic of price hikes down the line, saying that the cost as well has peaked out for the company. Just going with the entire space as a whole, given the kind of numbers as well that we've seen from a lot of these companies, what's been your key takeaway, Chakri?
On Coal India clearly, the volumes will come back. Power demand will pick up. It's only a question of the pricing. And therefore, Coal India, the valuations have always been on your side. It's only the uncertainty regarding the volume uptake and the pricing policy. I think so from a positional investment perspective, I think clearly Coal India looks like.
The Economic Times today is reporting that the government is proposing to slash, it's a proposal. It's a recommendation which has been sent by the Heavy Ministry to a high-level inter-ministerial panel that will take a final call to slash the subsidies on electric two-wheelers. Look, subsidies are like clutches. Businesses cannot be running on clutches. Subsidies were given by a lot of states like Uttarakhand and other states when they wanted the industrialization process to start, when they wanted corporates to come in, but those subsidies go away. I think the electric scooter industry in India, in my view, is growing. They have a sizable market share. That sector is no longer on clutches. It needed a little bit of subsidy, but I think now for this industry to survive and to grow and to become large, it really has to compete with the current incumbents. Well, it's a small industry, so in the spirit you may say that India needs more electric two-wheelers, and this is something which should be the fiduciary government of the government to keep on supporting the cause. But ultimately, it's a competitive world, and in a competitive world, you cannot survive on clutches. That's my limited point. Chakri Lokpriya, do you think the subsidy on two-wheelers, electric two-wheelers, should be slashed or not? By the way, have you ever sat on a electric two-wheeler? बैठे हो आप कभी?
Have you?
Yes, once.
Yeah.
Just for an experiential purposes. It pretty much felt the same, excepting what I personally felt was that in terms of I don't know about the mileage, but in terms of speed, not that in Bombay roads you can speed up too much.
Any which way, yeah.
But the speed of a traditional ICE engine is much more superior.
Of course.
I don't think in electric vehicle right now you can create a 350cc RE. Technology still has to travel a lot because the battery itself is heavy.
Yeah.
Chakri, have you sat on a EV or you don't step outside the comfort of your Mercedes and your BMW?
No, sir, I haven't managed to sit on a two-wheeler EV. But I guess, on an EV car, yes, I've managed to do that. And there, of course, the Tesla, yes. Now, coming back to your question, I think the answer is worldwide there have been subsidies to promote EVs. And in India, of course, two-wheelers as a segment is a far bigger segment than it is in the developed world. Some of the FAME subsidies have already been kind of cut down, but companies like TVS Motors and Ather have kind of stabilized their product and will do well even without that subsidy. And because largely they got a new leash of life once the EV as a space came in, because gig workers who just want to get to A to B, not really pickup focused and all that, and we're happy with the EV product and with the overall cost benefits. So I think with the removal of the subsidy will not hurt the two-wheeler volumes, and because those volumes will continue to grow.
Right. Chakri, great to have you on the show. Thanks as always for joining in. Let's just quickly revisit what the SGX Nifty and what the pre-open rates are indicating. They will just come up for you on your screens. Let's also then get in some mid-cap strategies going. While it seems like we're going to have a comfortable start back at 18,300, so somewhat in line with what the global sentiment is this morning. But Kunal, on your mid-cap radar.
So it's Deepak Nitrate which looks attractive. The stock has confirmed a swing breakout after 5-6 days of consolidation. So that's a buy. Targets of 2050 on the stock over the near term. Stop loss to be kept at 1885.
Right. Nooresh, your mid-cap strategies?
So that would be a buy on L&T Finance holding, maintaining the bullish stance on the whole NBFC space. The stock has given a breakout above that 9,500 mark. It's a resistance for the last 2 years. Also still available below the pre-COVID prices of 125. Over the last 3 sessions, the stock has shown relative momentum as well. A huge inverted head and shoulders breakout here. A stop loss at 95 and a target price of 125.
Move on then. Khabar on D Street. Well, sources tell ET Now that South Indian Bank has identified a candidate for the new managing director position with experience of over 20 years in the banking space. Let's take it across to my colleague Sharad, who joins in with all the details. So Sharad, what's the khabar?
Well, yes, in focus we are having South Indian Bank, and what we are gathering from our sources is that company has identified the person for the position of MD, and this is expected to come in from the current leadership crop. And the current MD CEO himself, Murali Ramakrishnan, has been grooming the new candidate, and the board has also actually backed the idea of the internal hire. Apart from this, also this formal announcement is expected to kick in the next few weeks to come, and the candidate himself is having more than 20% experience in the banking segment. And apart from this, also select funds have recently met the management and have been getting the hints on the succession plans. Now, looking at the stock itself, this company delivered a very strong Q4 numbers, and the asset quality also improved. And apart from this, looking at the Bloomberg numbers, the 12-month target price has been set at almost 20 rupees per share, which indicates roughly a runway of almost 20% of return potential over the next 12 months itself. And the stock itself, if you look at it from June lows last year, the stock is up more than 120%.
Right, Sharad, we leave it at that. South Indian Bank, that's going to be the one to look out for in trade. But let's move on and let's tell you all about a lot of stocks which are on Nikunj's radar.
Stocks on the editor's radar, and those graphics are getting my stomach rumbling, Nikunj, because we're talking about all the QSR plays, Devyani, Sapphire, Jubilant, Westlife, and we've done an interesting comparison as well, discussing what the outlook has been in terms of their performance of the individual companies, as well as what the commentary has been down the line? What's really stood out? Because I think Westlife was the only one that came in with healthy numbers.
You know, the most important number which markets looks at in order to understand the growth of the business is SSS.
Yeah.
The same store sales. In that, there is a lot of variable factors which really are at play. Frankly, if you ask me, Jubilant is growing. KFC, which owns, KFC, we don't need to introduce the product here, that business is growing. But in case you're wondering that why, if Indians are eating out so much, why you don't have a really strong trend in the entire QSR space, at least the listed ones. Do you want to guess that?
Why is that?
Indians are eating biryani.
None of the companies,
none of the companies here actually are in the biryani business. They're still in the startup space. So the point I'm trying to make here is that these businesses, the QSR space, now it's almost like a basket of 4-5 names. They've gone through a patch of high inflation, solid expansion, and huge uptick which came immediately after the COVID as you were staying indoor and you were ordering more food. And inflation also has really managed to take a piece out of that pie. But worst for the sector is behind us. That is the sense which you're getting in terms of the demand, and that is the sense which you're getting in terms of commentary. The problem is that this entire basket is very richly priced in terms of valuations. 54 times for Westlife, Sapphire Foods, 48 times, all of them. Now, this is pretty much like valuations what some of the FMCG brands they are commanding. And for me, anything which is commanding valuation of FMCG stocks, if it's growing at 15-20%, it means that markets are already pricing that in. I've got a report from CLSA on Jubilant FoodWorks, sell. I've got a report from Jefferies on Jubilant FoodWorks, external environment challenging. I'm not done. JP Morgan, Jubilant FoodWorks, neutral. And then you've got Macquarie, capex hike and muted near-term outlook. My limited point here is that while it's great and fashionable to talk about the QSR space, because that's the new India, that is the India which is going to be experimenting more with food. We are getting right now, I think we are at the transition phase right now where you want to eat more calories rather than focusing on the health part. That is how the migration is moving in small towns as well. So I think some of these stocks, at least the QSR stocks, are looking expensive. You want to buy them, but you don't want to buy them right now. And considering where the valuations are, I guess in the near term, these stocks can go through time-wise correction as well as price-wise correction. It's a great space to be in if you've got 3, 4, 5 year view. But these are not the great stocks to buy at the current valuation.
All right, that's Nikunj's take on the QSR play. But let's shift gears then and find out what the index calls are from our chartists this Thursday morning. Well, it looks like it's a hold recommendation from Kunal, a buy on dip strategy. That's what Nooresh is advocating. Remember, yesterday as well was a day of consolidation across the board, barring the small cap index, and that's the view coming in from our chartists. Interesting then to find out what the outlook is on the Nifty Bank. It's a consensus hold recommendation. That's what the market moodometer indicates.
Now, what will convince you that Nifty is going to make a new high and then go towards 19,000? What is the turning point for you?
So that breakout of 18,400, which we were discussing 2 days back, that's not happening for the index. And the leadership in the large cap names, that's also halting a bit. So you don't have the stronger names which are now participating. In fact, most of the large cap names which have actually rallied in the last 1.5 odd month, they've taken a pause. The baton has shifted towards mid cap names, but there are no new set of large cap names which are emerging. So in terms of levels, 18,400 and a close above this could probably be a strong convincing sign that the markets have sort of ended this choppy or a volatile phase in a band of 300-400 points. Or on the other hand, a breakout in terms of individual stocks, large cap names, or a renewed set of large cap names. Even if that happens, that I believe could be a signal that the markets are ready for a breakout.
Nooresh, how much importance would you assign to the fact that we touched a new high on the Bank Nifty on Monday and did not go beyond that? I mean, is that important or that is irrelevant?
Not really irrelevant because we are not seeing, say, a new high on all the banking space. So the largest weight in the Bank Nifty has not made a new all-time high. It just went there close to it. We are not seeing that happen in many of the banking names. So it's just a rotational play which has happened. We can't find many names in the banking space which have actually hit a new high. So ideally a new high should happen with say at least 2 to 3 heavyweights out of the sector making a new high. That did not happen. So it is just a rotation which is being played out.
A minute to go, and it's Thursday morning. We could be on for a good start. Global cues are strong and supportive. Looks like for the debt ceiling in the US, finally there could be a there could be a meaningful resolution in terms of what the US administration now could do, how to deal with the debt ceiling crisis. FIs, they continue to buy. They are saying, hello India. It's evident looking at the flows which have come out, flows which are there at least in the month of April, late April and May. Third, the open interest now seems to be indicating that the retail and HNI interest has just about come back, but we are not at any Humpty Dumpty level. I think markets will top out when you reach a Humpty Dumpty level. I don't think you're at a Humpty Dumpty level. The support, if you're planning to trade today, resistance 18,400. You go beyond that. Kunal has already painted the picture for us. Support 18,000. You go below that, then I don't think it's going to happen today. But if it does, then that the trade orientation then in the near term changes. 100 points higher is what the pre-open rates are indicating, and I think it would be somewhere there in terms of the market will open. First rates on your screen any second now. First rates on your screen any second now. It's a perfect market breadth. I'm not so much so fixated with the Nifty number today, but it's a market breadth. 1:12. Hello. This is like a near perfect bull market breadth. You see this kind of a market breadth and you say, wow, touch wood. I mean, bulls, where were the bulls? And why are they back so suddenly? The market breadth is near perfect. IndusInd Bank, Infosys, Power Grid, ICICI Bank, some of the stocks which I'm speaking in one breath. You want to look at Jubilant FoodWorks. There are 4 reports on my table. All 4 of them are talking about expensive valuations in the near term, and things could get bad before they get better. All the QSR stocks, even though it's fashionable to talk on the India consumption story, for the moment, Jubilant FoodWorks is down by about 3%. Shafai Foods flat, Jubilant FoodWorks 18 rupees down. Tata Motors 519, Bajaj Auto holding up. I want to look at TVS because if the subsidy on the two-wheeler is going to go down, that means the smaller incumbent players will also suffer, and a company like TVS and Bajaj will actually benefit. So I will not be surprised that TVS could actually come back in the second half of trade.
Yeah, a couple of other names. Jindal Stainless, of course, the India business volumes, the calculated EBITDA, all has done well on a sequential basis. So that's one stock in focus. There's Restaurant Brands as well, which came out with its numbers. The India business revenue, the India same-store sales growth, all have seen a decent uptake. JK Tyre, the margins have expanded about 350 basis points. There's MTAR Technology, Honeywell Automation. In fact, Honeywell has seen an EBITDA jump of 59% and margins are up more than 300 basis points on a year-on-year basis. MTAR, though, is not reacting to its positive numbers. Honeywell has gapped up 8.25% as we speak. Endurance Technologies, TeamLease, they all came out with a decent set of numbers. So just look out for those as well. There's also REC, which came out with its numbers. Not an impressive set. The NIMs have actually been lowest in about 20 quarters. RailTel too, unfortunately, the margins have come in at 14%. The EBITDA, though, has seen an uptick of about 2%. And remember, the margin comparable is 20.7%. So 14% is what they've delivered. Whirlpool as well, not a great set here. Margins at 6.3 versus 8.6. Vedant Fashion, that's the important one that I definitely want to bring up because there is an OFS in place. The promoter is looking to sell up to about 7% stake via OFS. The floor price has been set at 1161 rupees per share. 3.25% lower for Vedant Fashions as we speak. Sanghi Industries, GSK Pharma, they've all reported a weak set of numbers, and you can see that reflect on the stock price as well. There's JSW Steel too, which is another stock which is in focus. They've turned out to be the preferred bidder for composite license of an iron ore mine. That stock, though, has started off well in the green as we speak right now. What about the big buzzers from yesterday? Hero MotoCorp, IndusInd Bank, Exide, and then let's check in on what SBI is doing ahead of its numbers, as is ITC. Those stocks will just come off you next. SBI holding up nearly 0.5% or so, 588, and so is the case with ITC, hovering around that 430 rupee per share mark. For the index as well, it's not a bad start, Kunal, with 18,300 back in sight.
Yeah, it's a good comeback for the index, I would say, from yesterday's selling, which we'd seen, in fact, the last 2 days. So let's hope that the move sustains and it's not a half an hour, 1 hour move for the indices. We'll need to see support from many large cap names in that aspect. Now, the stock which I would look to trade on the open would be L&T Finance. The stock making a strong comeback above the 3-digit mark for the first time, I think, in the last 2 or 3 years from 2020-21 is where the stock has come back above that 100 levels. Looks attractive and would be a stock which I would recommend to clients as well.
Right. Nooresh, what are the first trades that you're punching in?
So it's the same stock, L&T Finance Holding. That's the one which is breaking out on a 2-year high. Expecting it to continue in the whole NBFC space to remain in momentum.